All right, but please let's mute every mic until when you want to talk so that we can minimize the. So please, TechnoSpark 7P, mute the mic, please.
All right, sir.
Thank
Let
you.
me do that straight away.
All right, thank you. All right, so today we'll be looking at returns, assessments, and collection procedures. So what do we mean by tax returns? What do we mean by tax assessments? What are the various collection procedure relating to the various forms of taxes? So we will be considering the following outline in the course of this class. We look at the need for tax registrations and display of TIN on all documents. Why do we have to do this? Is there any statutory requirements for this? What is the legal implication of doing this, right? We'll be looking at that in the course of this class. The nature of tax returns. What are the various forms of returns? First of all, I think, what are the various forms of taxes before we will talk about the accompanying returns that should go with each of the form of taxes. We look at the value-added tax in particular. We look at the registration requirements to processing VAT and CIT returns. We look at the statutory due date for filing tax returns. We looked at penalty for non-compliance with various statutory tax obligations. We look at assessment procedures for CIT and other forms of tax. What is the meaning and the process for back duty? What is the statutory period within which back duty could be conducted? Then we look at that, then we consider service of notice of assessment by the relevant tax authority, collection procedures, currency of tax payments, of payments of taxes, and the last one, enforcement procedures. All right, so I believe we are all ready. Display of TIN on all documents. TIN, as we all know, means tax identification number. And we also know that in our very first class, I think we expatiated on this when we said that tax are collectible at the federal level and at the state level, including the local government level for some form of levies, right? The relevant tax authority at the federal level is known as the Federal Inland Revenue Service, while at the state level, we call them the State Internal Revenue Service. So it is important to note that each of these tax authorities has a means of identifying its taxpayers. So what the Federal Tax Authority uses in identifying its taxpayers is what we call tax identification number. So most of the time when we mention TIN, we are most likely referring to tax identification numbers used by the Federal Inland Revenue Service. But in each state actually differs from state to state. While some states still use what we call tax identification number, or the JTB TIN, states like Lagos in particular has two unique numbers for its taxpayers. One is called the corporate tax identification number, which we call the corporate ID. This is for incorporated entities that has tax obligations or agency obligations to the tax authorities. While we have what we call the payer ID, which is actually the tax numbers allocated into each of the individual taxpayers, right? So we need to have a proper perspective to this because it is crucial in understanding what we need to do and how we need to do or render our various tax obligations. It might also be relevant for me to emphasizing these that as noted in the various tax regulations, it is expected that every taxpayer in communicating or exchanging any correspondence with the tax authorities, whether at the federal level or at the state level, must always quote their tax identification number. Whether you use the tax identification number, or you use the corporate ID, or you use the payer ID in any or all of your communications or correspondence with the tax authority, we must quote or reference this number. It's easier for the tax authority to actually relate with each taxpayer's numbers as opposed to the name. So starting, the provision of section 10 of SITA, when I say SITA, for the benefit of those who are not very abreast with our earlier classes, SITA means Company Income Tax Act. So this is a tax law that relates to taxation of incorporated entities, and it is administered by the FIRS. So the provision of section 10 of SITA, backed by the Finance Act 2019, recommends that every company registered in Nigeria should have a TIN to be displayed by the company on transactions with individuals, businesses, correspondence with the FIRS and other stakeholders. So what does this mean? It means that effective as amended in that section and further corroborated in Finance Act 2019, and also as further supported by the CAMA 2020 as amended, every businesses in Nigeria is expected to have its own unique tax identification number. And this tax identification number must be on your letterhead, right? So you must reference this number when you are having any form of business transactions, whether with individuals or other businesses or in any correspondence with the tax authority. The impact of this is that should your business transactions has any tax implication and the transacting parties has to render any tax agency responsibility on behalf of each other, it will then be easier for them to engage in the relevant tax authority accordingly. So I believe this is well understood as explained. The provisions of section 10 of SITA also mandate bank to request for TIN from companies and corporate bodies that wish to open accounts with them. Effective from the from the CAMA 2020, you will observe that prior to this very moment, maybe the bank has not been very intentional on this, but from that very period, you cannot open any account without provision of TIN to the bank. So as tax professionals or as accountants or as anybody or business owners, you definitely will need to know, if you don't have this TIN initially, you need to know how to generate this TIN. And that's when I say TIN, I mean the tax identification number. You need to know how to generate it and how to manage every tax-related affairs relating to this. From time to time, I will mention or reference various sections of the tax law. I think we had earlier emphasized at the beginning of our session, this mentorship sections, wherein we emphasize that virtually everything we do as professionals actually has one legal backing or the other. So it is very important for us to not only know why we do what we do, but be able to reference what we do to a substantive or the most applicable legal document, right? I've emphasized it here that why every organization or potential taxpayer or businesses need to display their tax identification number with all transacting parties or when engaging the FIRS is as provided in section 10. So where you don't do this, it means you actually, or you would have actually contravened the provisions of section 10 of CETA. So some of these violations actually are punishable by various sanctions in terms of fines, in terms of penalty, and some, very few of them, by imprisonment. So we need to do what we need to do to avoiding those fines and penalty where it is very, very possible. So that being said, let's look at the next one. Nature of tax returns. You will have also remember in our very first class when we actually define what tax is and the various types of tax. The conclusion then that taxes can be classified into two, those that are direct and the ones that are not direct. I want to be sure that I'm not alone on this. Can somebody bring us to speed on what is a direct tax and what are indirect tax with examples? You can either enable your mic to answering this question or you use the chat box. What are direct tax and what are indirect tax with examples? Anyone? Abdul Wahab, you'd like to try? I'm sure you got my question.
Yes.
Yeah, can you try?
Yes, no, I think direct tax is a tax that is that the burden cannot be transferred.
Can you speak to your mic very well?
Okay. Direct tax is a tax that the burden cannot be transferable to the to another party. So, example of direct tax, such as company income tax.
Okay, that's correct. What about indirect tax?
Indirect tax is a tax that the burden is transferable to third party, such as value-added tax.
Okay, thank you very much. So I just want to be double sure that we have a good understanding of what we are doing. Somebody asked a question on the chat box that how can he be getting linked to this training? I'm sure that even though today may be your first time, you must have been added to the WhatsApp group, right? If you have not been added to the WhatsApp group, please chat me up on this number below immediately after this class. So all communication with all participants are actually through the group. All right, so that being said, basically we have two forms of taxes: direct tax, which represent those taxes that are the burden of payments are actually felt directly by those that actually pay the taxes. Example of that is the PIT, is the payee, is the CIT, and is the education tax, right? These taxes are the burden or the inconvenience of the payments were actually felt directly by those that pays the tax. Other examples still include the capital gain tax, stamp duty, and the likes. But for indirect tax, the burden of payments are not actually felt by those who paid it directly, because even though they make the initial payments, but the burden can be transferred from various stages of the transaction processes until the final consumer. And a typical example of that is the value-added tax. I have a question I want to put forward again. Is Withholding tax, is it a form of tax? Withholding tax, is it a type of tax? Ebuka, can you respond to that, please? Is withholding tax a form of tax? Oh, Khadija, can you enable your mic to explain your positions very well? Hello, Khadija, or who is willing to explain it to us? Is withholding tax a form of tax? Okay, Victor, explain. You said yes. Explain to us. Okay, Vachi say it is not a form of tax. Then what is it? If it is not a form of tax, what is it? Can somebody speak to me? Yes, so she's saying it's an advance payment of what form of taxes? Of income tax. All right, so Elizabeth is also saying it's not a form of tax, it's an advance payment of tax. Very good. So please, for those who said yes, it's actually wrong. Withholding tax is not a form of tax. And how we could know this again is that there is no distinct tax law that actually specifies the chargeability of withholding tax. It's actually a subset of other forms of tax laws. For example, we know that what compels tax authority to collecting payee and PIT is the PITA. We know that what compels tax authority to collecting VAT is BATA, Value Added Tax Act. What compels tax authority to collecting company income tax is CITA, Company Income Tax Act. But which law actually compels the collection of withholding tax? There is no law. So it is rather a subset of PITA and CITA. So what it then means is that withholding tax is not a form of tax, but it is an advance payment on certain, an advance payment of payee or PIT or company income tax on some liable transactions. So we need to take note of that. Please don't go and say it outside that withholding tax is a form of tax. It's not a form of tax. So that being said, what are the nature of tax returns? So we'll be making reference to these depending on each types of taxes we are looking at. So Section 55 of CITA 2021, as amended, stipulate that every incorporated entities or companies carrying on business in Nigeria is required to file income tax returns. So I'm sure that if you're the accountant in a company or a tax consultant, by now you must have been preparing to filing tax returns for your clients whose accounting year ends in December. So if that is the case, why do we have to do these returns? It's because of the provisions of Section 55. And Section 55 of what? Section 55 of the Company Income Tax Act. We had earlier shared most of these tax laws in our previous training slides and materials. So anytime any section of the tax law is being referenced, when you are doing your personal revision, do take time to making reference to these sections that have been mentioned so that you can further concretize and enlighten, and contextualize your understanding of what has been explained, right? Section 55 goes further to recognizing three different unique peculiarities of business. Businesses that are just newly incorporated, businesses that has been in operation for a while, and those who cease operations, right? So it says that if your business has just commenced, right, when are you expected to filing the company income tax returns? So it's expected that within with the FRS 6 months after the year end, When you say 6 months after the year end, what that means is that for a business for a company that have been in operation for more than 12 months, right? You are expected to file your tax returns 6 months after the year end of the business, right? You will also recall that in one of our previous classes, we did differentiate between the tax year end and accounting year end. And we said that accounting year end is the accounting period to which the financial report has been prepared to. Most companies prepares their accounts from period from January to December. So December will then be taken as a year end. So if your company prepares their accounts to 31st of December of every year, what that implies is that for accounts year ended for 2021, you are expected to filing the tax returns not later than 6 months after the year end. So 6 months after 31st of December 2021 definitely is not later than 30th of June of 2022. So then what happens if your year end or the year end of your client is not 31st of December? Let's assume the year end of your client, or let me put this as a question. Assuming the year end of your client is 30th of June, for an account that is being prepared to 30th of June of 2021, when will the returns be due for filing? For a company whose year end is 30th of June, when will the tax returns be due for filing? If the company's year end is 30th of June, the company has prepared accounts to 30th of June of 2021. When will the
31st December.
31st December.
December of which year?
2021.
2021. Okay. So what happens if the year end of the company is 30th of November? 30th of November of 2021. When will they file their accounts?
30th April.
No, it will always be the last day of the month you are referencing. It will be 31st of May. You understand?
31st May. 31st May.
Exactly. But
Yeah,
if it happens that the last day of the month in question falls on a weekend, please file it not later than the Friday of the last week. Please take note of that. If the last day of the tax returns, of the due date of the returns actually falls on a weekend, right? Make sure that the tax returns is actually filed by the last Friday of the following month. Is there anyone on this platform that actually works in a financial institution or in a pension fund company or in an investment company or insurance? Is there anybody on this platform that works in either a financial institution, insurance sector, other financial institution, or a pension company? Why I'm asking is that there is a particular return that needs to be filed not later than the 31st of May of this year. Who can tell me what the returns is? Victor, enable your mic. Do you work in an investment company?
Yes, sir.
Okay. Are you in the finance department there?
Yes, sir.
Please, on Monday, double check with your finance unit and your tax consultants. There is a returns that need to be filed not later than 31st of May of this year. We call the returns common reporting standards. Common reporting standards, CRS. It is peculiar to entities that works or that operates in the finance sector, other finance sector, whether commercial banks, microfinance banks, or money lending institutions, investment companies, insurance, and pension companies, right? For more information about this, maybe after this class, you might private chat me for me to give you more information. Penalty for not doing it is 10 million, right? So please, you can actually save your company from being exposed to this kind of penalty if they have not done it. So there are still a couple of days for this to be completed. I hope you got that.
Yes, sir.
All right. So, so that being said, we've mentioned that for company income tax returns, the statutory period for filing these returns is usually 6 months after the year end. But what happens if the company has just been incorporated? Okay, somebody raised his hand. Francis, you have the floor.
So please, the name again, the name of that report. I didn't get it clearly. Common what? Hello, sir.
Okay, the name of the report is CRS returns.
CRS.
CRS returns, that is Common Reporting Standards.
Okay, all right.
It's a resultant effect of one of the BEPS principles, right? In our second mentorship section, we'll be going into some other international tax issues, where we'll talk about transfer pricing, country by country reporting, and other BEPS principles and action points and all of that. All right, so we've reached a consensus that for companies that have been in operation indefinitely, the due date for filing their CIT returns, company income tax returns, is 6 months after the year end. But for companies that have just been incorporated, they are expected to filing their first returns within 18 months from the date of incorporation. Within 18 months from the date of incorporation. Please take note of that. And when you want to file in these returns, you are expected to providing the audited accounts, the tax computations, the capital allowance computations. You are expected to also provide an evidence of payments of all the tax that have been accrued or part of it, if you so choose to pay on instrumental basis. Esther, is it a mistake or you actually want to ask a question?
I want to ask a question.
You have the floor.
Okay, sir. So you said the company that has just been newly incorporated is to file its returns 18 months after incorporation.
Yeah.
Isn't it after? What if they had not commenced business?
You are expected to filing the returns within 18 months from the date of incorporation.
Even without commencing business?
Yeah, that is what the law says. That is what the law says. You are expected to filing that returns within that very period. It's very crucial.
Wow. But the
So
note
even
here
if you
says
have,
after commencement of business.
What do you say?
The note on the screen here says
that is
or
an
18
omission.
months after
That is an
commencement.
omission. That is why I decided to stress it.
Wow. Okay, sir.
Okay, any other person who wants to ask a question? I can still see some other hands up. Adeni, you have the floor. Adeni, is it a mistake? Is there any other question before I go on, sir? Okay, so please, it is very crucial for you to take note of this, that companies are expected to filing their tax returns within 18 months from the date of incorporation. Adeni, you have the floor.
All right, sir. You mentioned capital allowance computation as part of the return to be submitted.
Yeah.
Now, there is a new development on capital allowance,
Okay.
which FIR just written to the taxpayer and consultants that people who expended QCE up to 500,000 should go and get one certificate.
Okay.
How easy is that process? Looking at the campaign made by federal government on ease of doing business, what is the cost of processing that document compared to the benefits to be derived from that document?
Unfortunately, okay, let's first of all put the question to the understanding of everybody. So the question Adeni is putting forward is, we agreed that in our last, one of our classes, that we said that when you are completing your CIT, depreciation, which is representing the wear and tear of the fixed asset that you have used in the business, for tax purposes is usually disallowed. And in lieu of this, capital allowance will be granted, right? There is a caveat in the tax law that says that because this capital qualified, because of the cost of those assets are actually at the discretion of the business owners. For tax purposes, the cost of that asset is called qualifying capital expenditure, right? So because the cost is actually is usually agreed by or determined by the business owner, there could be a possibility that the business owners could have inflated or unnecessarily overstate the cost of those assets. So that provisions that FIRS is just trying to wake now has always been there, right? My only reservation or exception to the pronouncement by FIRS is that amount is as old as far back as 1990 or even more. So if you look at the equivalent costs of assets when that pronouncement was made, before businesses can acquire the cost of asset equivalent to 500,000 then, the cost of the assets must have been very huge. But if you look at it as of today now, inflations and every other economic effect has actually made that amount to be very immaterial. Even there are single laptops you can purchase for over 500,000. So what I expect FIRS to have done is to review the applicability or practicability of that particular caveat. So personally, I have some reservation because the cost of even processing that CAFA, it may even be, or most of the time, even much more than the cost of the asset you are getting certification for. So I agree that on one side, the federal government is propagating that Nigeria is an economy that actually encourages ease of doing business. But the pronouncement by FIRS is a counterproductive of what the federal government is saying. So what I've actually proposed is that collectively through our various district bodies and CIT, and I think we should have an engagement with the FIRS. In the last conference that was held in Abuja, similar questions was also raised. And a conclusion therein was that CITN will continue to have further engagement with the FIRS. Possibly, they will have a review of that threshold, right? So, but it is not out of place for them to requesting for that document. What I'm only dissatisfied or disgruntled with is that it is unreasonable for the benchmark that they have placed. I believe that answers your question, Adeni.
You are very, you satisfy my question.
Thank you very much.
You are welcome, sir.
Any other question before we go ahead? All right. So in filing your tax returns, though FIRS is trying to digitalize this process now, so it is currently being done through tax promos. But what we in Lagos, what we are required to doing is that after you must have filed these returns in through the tax promos, you are expected to still make submission of the hard copies of these documents, at least the accounts and the tax computations with the relevant tax offices. Those in Abuja, tell me what happens in Abuja. Are you required to also make physical submissions after you must have filed on tax promos?
Yes, sir.
All right.
We do. But I have a case now. It's an IT. It's an IT. So I submitted the physical copies. The auditor is actually in Lagos. I just helped him to the MSTO is here. The tax incentive department is Abuja. So he sent me the accounts. I took them to the department. I filed the hard copy. Then they asked me to go and file on the tax promax. And I've submitted the updated form, tax promax update form that will enable them register the IT on tax promax. But they say they are having issues with it for months now. So I've not been able to file, but that requirement is there. When you submit hard copies, you still get back to file on tax promax. By all these accounts we are preparing now, trying to beat the deadline of June 30th, we are going to file them all on tax promax. When you go to submit the hard copy, they will ask you if you are filed on tax promax before they collect most of the tax office.
Okay, okay.
Yes. Yes.
Thank you very much for your contributions.
Thanks, sir.
Is Danjuma here? Hello, Danjuma. Danjuma, if you're here, please quickly, enable your mic. I need to speak to you on this. Esther raised a concern. You are the high of the FIRS on this platform. Danjuma, are you there? Okay, Esther, you might need to engage for those concerns you are having. It's possible Danjuma may, I can't recall the exact tax office where Danjuma works, but he may have some contacts that could help you in ensuring that the concern you're having on the tax format updates are being rectified. So speak with Danjuma after this class.
Thank you so much, sir. I appreciate. Okay.
What is the challenge?
Okay, I submitted hard copies to the tax incentive department. The hard copies of an IT. I submitted the hard copy 2017 and 2018 accounts. So I was asked to go and file on tax promax. So I went back, filled the update form and submitted to the department. It took them like 2 weeks. I kept checking my mail. They didn't send the password. So I got back to them. I went back to them. The lady told me that the IT on tax promax, that what is showing on the tax promax is that the credentials have been used. So I don't understand. I'm still on it. I'm not. So I said, what can be done? The lady doesn't even know what to do. So I just left there. Up till now, we've not been able to file that account.
Okay.
They've not been able
because
to register me on tax promax.
I had one issue last year. It was multiple RC. That's the feedback from FIRS. So I went back to CAC for the correction. When it was corrected, they were able to register that company on tax promax. We filed the account last year.
Okay, but
All right.
but this one is IT. Is not a limited liability company.
Okay.
Because if you check CS, yes, it's
Okay.
not RC, it's IT. Yes.
NGO.
There could be a
trustee.
company, yes, an NGO, yes, incorporated
okay.
trustee.
Okay.
So there could be a registered company with that same RC number for limited company, but it should not affect. It's not supposed to affect NGO, because I've had issues like that. A business name having the same number with RC.
Okay. It could
Yeah.
be. All right.
Yeah. So
All
they've not been able to register the IT on Tax Pro Max. So we have not been able to file the account on the Tax Pro Max. Please, if there's any help, you can help me with
so
it.
Adeni, let's try and Danjuma.
Now,
Grace
what I will suggest, you can send me the RC number. Let's check on post incorporation of CAC if there is any other similar RC number coming out with the same number. If that is the case, then it may be multiple RC case.
Okay.
All right.
Okay.
So that is one of the benefits we have from this kind of platform. Let's try to build a strong network to ease our various work. From experience too, I've also found out that sometimes when you use our various customized official emails, FRS platform, particularly that Tax Pro Max platform, have sometimes they might not connect easily. So you probably might also need to refill the form or check the email that you have provided. Most of the time, the system relates very well with a Gmail account.
Yeah.
So what I do for most of my clients is, whenever I had any new clients, instead of using an existing email or the official email of the client, I will create a Gmail account for that client in particular.
That's all we did. It's a Gmail account newly created. We create a Gmail account for new clients that we are registering on Tax Pro Max. We don't use existing emails.
Yeah, okay. Then sometimes in the course of trying to doing the updates, it's possible that FIRS has also typed the email wrongly. These are some of the things I've observed. Okay. So they will tell you they've completed it on their own side. So in your next visit to them, check what they actually updated on their record. Check it with the email you have provided. It's possible that the email has been typed wrongly.
Okay, sir.
Yeah.
I appreciate it, sir. Thank you.
All right. Thank you.
Thank you.
The next person raising his or her hand, you have the floor. Somebody raised his or her hand. I think it's Virtue. Or is it a mistake? Oh, I think it's a mistake. So that being said, those are the things you need to know as far as period to filing tax returns is concerned. When you are filing for the very first time, you are expected to file it within 18 months of the date of incorporation of the company. Most people have always misinterpreted this with the date of commencement of business. So please, it is not. It is from the date of incorporation. And when you're doing this, you need to submit this audited account, the tax computations, the capital allowance computations, and the evidence of payments of whole or part of the income tax due. So within the plight of what the concern that FIRS has raised now with regards to the providing evidence of the incurring of the CAFA that have been obtained on the assets qualifying capital expenditure. Of course, we'll continue to engage the service, but that will not stop you or should not stop you from making your tax returns. The best they could do is, after you have raised your tax returns, they could give you a debt review assessment trying to disallow the capital allowance that you have claimed. And I think that individually as a firm and through the various district offices, district societies and CITN as a body, we need to continue to engage in the service until when we have a much more reasonable propositions on this. However, for small companies with turnover of 25 million naira or below, the service may by notice specify the form of accounts to be included in the tax returns for small companies instead of the audited accounts. You will also agree with me that the last amendment to the Company Income Tax Act, Company and Allied Matters Act, right, 2020, actually gave some exemptions to companies that are small, that the accounts does not actually necessarily need to be audited, right? FIRS has not actually come up with a much clarity on this, because by default, whether you are small, medium, or big, what the tax law expects is that you should provide audited accounts. In some exceptional instances, management account has been used to filing tax returns in anticipation for the completion of the audited accounts. So we need to also have clarity about this. I have filed a number of returns that was done with management accounts, but you have to address the concern you might be having in this instance with each of the tax authorities. But of course, if your client is not having any reservation to the account being audited, and you as auditors has also not giving them an exorbitant bill for the auditing, because they can get the accounts audited rather than waiting for anticipated clarity in this regard. All right, with regards to non-Nigerian company and non-resident companies, how will this set of organizations or institutions be able to file their returns? I need to make clarity in this regard, that for the purpose of ascertaining what is the tax due or how to ascertaining the CIT due for any incorporated entities, there are 4 provisions in the tax law, any of which the tax authority may decide to explore. One of them is section 40 that talks about the rate of tax. And that rate of tax simply specifies that it's actually identify companies to be in 3 categories: small, medium, and big. The small ones are taxed at 0%. The medium one are taxed at 20%. The big one or the large one are taxed at 30%, right? There is also a provisions of section 33. Should your rate of tax be less than the minimum tax, that is section 33, it provided instances whereby company can still be liable to minimum tax, where provided they are more than 4 years in business and they are not operating in certain categories, one of which is a manufacturing sector, right? You may be exposed to minimum tax provisions. Unlike what you have before, there were graduated rates in ascertaining the minimum tax, but the advent of the Finance Act has changed the rates of this minimum tax on 2 different occasions, right? Then there is also the provisions of section 30 that could subject some certain organization to tax on turnover basis, right? And I think that is what actually most of the time applies to non-Nigerian entities. We'll talk more about that as we go on. Then the last one is the relevant provision of section 19, that is the dividend basis, where the dividend paid by the company in a particular year relating to that year and tax year in question is higher than the taxable profits. The tax authority may opt for subjecting the company to tax on a dividend basis. So please, from time to time, as tax consultants, we need to be abreast of the relevant provisions of these tax laws and be able to engage our clients and tax authority, making clear reference to the appropriate section so that people or everybody who you are communicating with will be convinced that, oh, you don't only understand why you are doing what you are doing, but you know and identify the legal premise on which you are doing what you are doing. That being said, non-Nigerian companies and non-resident companies, these are entities that are not incorporated in Nigeria, but whether directly or indirectly, they have earned income from Nigeria. And as a result, they should be liable to tax and certain tax obligations in Nigeria. A non-Nigerian company is a company not registered or incorporated in Nigeria. Section 55 of CETA, as amended, provides that where a non-resident company, being a non-Nigerian company, derives profits in Nigeria, and which withholding tax is not the final tax suffered on such incomes, right? Such companies shall be required to submit returns for the relevant year of assessment, right? So it means that a non-Nigerian company or individual could actually have what we call a frank investment income, or what we call other forms of income that are subject to tax even above the withholding tax rates. So what are those incomes that a non-resident company can actually earn in Nigeria, on which the withholding tax deducted will be regarded as final tax? One of those incomes is a professional fee. If what the non-resident company actually earned from Nigeria is just a professional fee, then the withholding tax that must have been deducted by the transacting parties will be taken as the final tax. If it's just a consulting fee, it's more definitely to be regarded as a final tax. If it is a dividend or even a technical fee, it may be deemed to be the final tax. Anything outside that, even though the withholding tax must have been deducted, it may not be taken as the final tax. And the company concerned is expected to filing returns with the relevant tax offices. So when you are doing that, what are the things you need? You will need the audited account of the non-resident entity. You will also need a schedule of the tax computation based on the profit attributable to its operation in Nigeria. You will also have to get online access for the tax promats and make sure that the returns are filed online. Differential between the withholding tax that must have been deducted and what is additional, the tax difference due, evidence of that payment must also be provided. I believe you understood what I've explained there. Please, this is a very sensitive tax concern that most people are not exposed to. If you have any reservations on what I've explained here, please quickly ask questions. Otherwise, I will assume everybody understands. Any question on this in terms of the tax returns expected of a non-Nigerian company? Any question? Any question?
Sir. Yes, sir.
Okay.
That section, the way it's quoted here, as I'm watching it on the screen, I need some more clarity. Section 55 of CETA.
Yeah, what clarification do you need?
Section 55 CETA as amended provides that where a non-resident company derives profit in Nigeria and which withholding tax is not the final tax suffered on such income. As if it's different from what you said.
Okay, let me explain again. Let me explain again. Assuming Google does not have a business place or a PE in Nigeria. PE means permanent establishment. If they don't have the Nigerian version or Nigerian incorporated entity for Google, so let's just assume that they don't have one. Google is assumed to be a US-based company, but they have earned income from Nigeria, right? Are you with me?
Yes,
so
sir.
what this section is saying is that provided what they have earned from Nigeria is not a professional fee. What Google charge is customers or client is not professional fee, right? And if it is also not a consulting fee, and it is not a technical fee, all that Google charges is none of these fees, and it is also not a dividend earned from Nigeria. Therefore, Google, who does not earn any of this income, but has earned other income in the normal course of his business in Nigeria, is expected to filing tax returns with the Nigerian government. What
I'm okay, sir. I'm okay.
Let's also look at another company. Let's say a foreign company. Let's say, give me a foreign name, please. Stone Limited is a UK-based company. And the firm renders legal services. Say, for example, they render legal services to companies or individuals in Nigeria. You know, the parties they are transacting with in Nigeria will have charged withholding tax on their operations. Do you agree?
Yes, sir.
Good. That their fee that they have collected is more likely to be a consulting fee or a professional fee. Do you agree?
Yeah. Yes, sir. Yes.
So what we are saying is that if it is any of this fee, even though the company has paid withholding tax in Nigeria, it does not have any further obligation to filing tax returns to the Nigerian government.
Okay.
So that means that all non-resident or non-Nigerian company that earns income in Nigeria, there are some of them that even though withholding tax has been deducted or not, they will still be obligated to filing tax returns with Nigerian government. Sure. While there are others who could have earned professional fee, consulting fee, dividend income, or technical fee, will not be required to filing any other returns. That withholding tax will be taken as a final tax obligation to the government. That's what we are saying.
Okay, sir. Thank you.
Now, for the Google I've explained or I cited, you know, Google most definitely will have prepared his group performance accounts, right? So
yes,
what they need to do is to show us the group audited accounts and a subsidiary statement showing what they have actually earned from Nigeria.
Nigeria, yeah.
Do you understand? So trying to say,
yes,
oh, we have made a total revenue of $10 billion, but only 1.5 billion came from Nigeria. Do you understand? And on the
yes,
premise of that, they have done the computations and they have ascertained the tax due. But most of the time, when these categories of companies are to filing the returns, you know, they can ascertain the portion of the total income that is accruable to Nigeria. But it is very difficult for them to ascertain portion of their total expenses that is accruable to Nigeria. So that is why it will be difficult for you to do a regular computation, but to apply what Section 30 has provided. Do you understand?
Yes, I do.
So we'll talk about Section 30 maybe in another topic or time when we'll be having a topic that relates to that. Time will not permit us to dwell much more on that now.
Thank you, sir.
Okay, so somebody is asking what happens to the non-resident company who fail to file in those tax returns. Of course, there are a lot of things that could happen, particularly if they have an agent they operate with from Nigeria. The relevant provisions relating to penalty and fines that will be accruable to any tax defaulters will then be raised against them through the usual PE or contacts they have in Nigeria. So I have a similar instance of this. I have one of my clients that usually engage some foreign entities to render certain services. So they could not see the client of my clients who are not in Nigeria, they could not see their business split because they actually don't have one in Nigeria. So when they want to serve any tax correspondence in terms of fines or whatever, what they just did is to address that letter and put it in care of that my client. So if that client of mine does not want to bear that responsibility, it has to contact his own clients and ensure that whether they have such obligations or not, make the contact and find a way of either engaging you as their consultant, or maybe they have their own contact as a consultant that will address the case. So that is how that will be addressed. I believe whoever that asks that question, you understand my response to it. Is that clear? All right. So that being said, let's go to the next one. So next one we're going to look at is, that is what we have explained thus far relates to okay, somebody also asked a very important question here. How will they file tax returns when the company does not have a TIN? No, they will definitely have had a TIN. So I need to explain how you generate TIN for a non-resident company. When a resident company is having a transaction with a non-resident company and it has to charge withholding tax, and also note that most of the time when you are transacting with a non-resident company, some of those transactions may also be vatable. They need to file what we call a reverse VAT. So what we do, which FIRS also supports, is to use the address of the company in Nigeria, who is a contact to the company not in Nigeria. The company in Nigeria will request for the CAC document of its own client, who is not in Nigeria, but we will use the address of the company in Nigeria to actually register for the generation of a TIN. And with that, they will be able to make the requisite returns either as VAT or CIT, as the case may be. Victor, I believe that answers your question. So value-added tax registration. I need a volunteer to read, please. Any volunteer?
Okay, I'll read.
Okay, thank you.
Section 8 of the Value-Added of VAT Act 2011, as amended, requires a company to register for VAT purpose with the FIRS within 6 months of commencement of business. Failure to do so attracts a penalty of 50,000 naira in the first month and 25,000 naira in subsequent months. A company that ceases business is required to write a notice of cessation within 90 days of cessation of trade or business.
All right, so this is just talking about, so further explain what we have earlier explained, is about when to register with the tax authority, FIRS in question now for VAT purpose. Just like I emphasized, it is not upon commencement of business, but that is a typo in my presentation, but on incorporation unit. And where your company has also ceased operation, you are expected within 90 days to notify the FIRS. Not only on cessation, when you also change your business address, within 90 days, you are also expected to notify the FIRS. Thank you, Esther. Next one is registration requirements process for income tax and value-added tax. Of course, most of us are familiar with this. You'll be expected to fill a questionnaire that will show the name of the company, the registered address, business address, precise nature of business, date of commencement, name and address of its directors and shareholders, address of major shareholders, and the other following document will also be required to be attached to that questionnaire. Certificate of incorporation, MEMAT from CAC 2 or CAC 7, that is for prior period, but in the recent times, most of these ones are not differentiated. Then VAT form 001 will have to be filled and submitted to the FIRS. You are to do the same thing if you are registering a non-resident company. So all the other information that will be required will be extracted from the CAC document from the incorporation documents of that foreign entity. While things that relates to addresses, business address and the likes will be that of its contact in Nigeria. I believe that that clarifies that. Please, any question before we go to the next thing? Any question? All right, so I'll just take that silent as no question. Due dates for filing of tax returns. Income tax returns, section 55, subsection 3 of CETA specifies statutory timelines. We have talked about those statutory timelines before. 18 months from the date of incorporation, 6 months after the year end. Then for VAT, you're expected to file 21 days after the date, after the month of transaction. Section 15 of the VAT Act of as amended requires a company to reach in 25 billion before it can charge VAT, right? But I felt that there is a lacuna in the last amendment to the VAT Act. After the clarification was given on the threshold, they were not very explicit whether organization doing turnover of 25 million or less should file VAT. But I advise my clients that whether you have hit the turnover of 25 million or not, what I do to avoid every unforeseen contingency is to encourage every one of them to file it. If you are not up to 25 billion, you file nil. If you are above 25 million, file and charge the VAT at the appropriate rate. So you might be required to do what works best for your clients, but I think as a policy, I like to actually guide against any unforeseen contingency. That's why I've chosen to advise my client like that. The penalty for non-compliance. Who is volunteering to read, please? Any volunteer?
I will.
Okay, you have the floor. Thank you.
Okay. So penalty for non-compliance, income tax. The penalty for not filing income tax returns is 25,000 naira in the first month and 5,000 naira in subsequent months. Any director, manager, secretary, or agent of a departing company who is proved to be guilty of neglect with the provision of section 55 of CITA shall be guilty of a fine of 100,000 naira or imprisonment of 2 years or both. VAT.
Okay, so thank you. Hold on, thank you. So what that implies is that if you are a director, a manager, or a secretary, an agent, or a tax consultant to the company that is aiding the taxpayer in violating the provisions of section 55, you might be liable to the fine as proposed or imprisonment. It is very rare, even though the law says it. I think we have seen no case of imprisonment thus far. But let me put this question to everyone. Assuming the year end of a company is 31st of December, and the company has prepared accounts of 31st of December 2021, no, 2020. Up till date, it has not filed the returns on the 2020 account. How much as of today would be the fine and will be the penalty for non-filing of the 2020 account? I hope you all got my question.
Again, sir.
Okay, let me take it again. Company A usually prepares account on 31st of December. It has prepared its 2020 account accordingly, but it has not been filed to date. To date as in as at May 2022. As at May 22, 2022. What will be the accrued penalty due on the CIT outstanding?
Please, I take it again.
Okay, for the last time, Company A usually prepares its account on 31st of December every year. It has therefore prepares the account of 2020 accordingly, which ended in 31st of December 2020, but failed to file the returns to date. How much will be the penalty that will have been accrued?
$160,000.
Explain to the house how you got the 160,000.
July 31st, 2021. 50,000.
July 31st.
From August 2021.
Okay.
50,000. 50,000. Then
the law did not say it's 50,000. It actually said the first month of failure is 25,000. So where do you see your 50,000?
For income tax,
income tax is first month of failure, 25,000. Every other month of failure is 5,000. You must have been using the fine for VAT. What we are talking about is CIT.
Okay.
It is 75,000.
Explain to the house how you got it.
Okay, so for you said 25,000 for the first month. That's after 6 months of the accounting year end. The accounting year end being December 31st, 2020. So 6 months after that, that's ending in June 30th, 2021. So from July 2021 to May 2022. July 2021 is the month that you'll be paying 25,000. Subsequent months from August 2021 to May 2022, that's 10 months. That's 10 months times 5,000. That's 50,000 plus the initial 25,000 for the first month, which is July. That's 75,000.
Very good. All right, thank you. Is there anyone who does not understand what we have explained? Please ask questions because it's very, very crucial to what we do. Anyone? Okay, so I'll take the silence for yes, for no one. Okay. Khadija, you have the floor to complete what you're reading.
Okay, so for VAT, the penalty for not filing VAT is 50,000 in the first month and 25,000 in the subsequent months.
Okay, so it is because of this fine that I did advise my clients who have not even met the threshold for charging VAT to ensuring that, oh, whether you have met the threshold or not, but the responsibility for filing is different from the responsibility of charging. Therefore, to avoid penalty for responsibility of not filing when you ought or technically ought to have filed. So that's why I advise them, all things being equal, you cannot over provide information, but you could under provide. All right, that being said, let's look at what happens to specialized company. Khadija, can you still help?
Yes, sir.
Okay, go ahead.
Okay, so for specialized companies, other specialized companies such as bank and stockbroking companies are required to submit the following returns. Banks. A company engaged in the banking business is required to submit the name and address of all its customers within 7 days after the end of the calendar month.
Okay, so
Should I
let me just
continue?
quickly explain this. There are special requirements that are required of certain entities. One of those is any organization rendering banking related services. The law actually requires them to providing details of their customers that has opened accounts or newly accounts opened in each month. And the requirement for filing this is it should be filed within 7 months after the month the account was opened. So if you have not been advising your clients rightly on this area, and you have a client that is liable in this regard, please seek the redress. I've seen instances whereby FIRS and even state tax authorities are taking the client up and they pay hugely for this neglect. All right, so go ahead.
Okay, so for stockbroking companies.
Hold it, we have a hands up, hold it. Esther, you have the floor.
Yes, sir. The banks, does it include microfinance banks?
All banking activities, all banking.
Okay. Okay.
All right.
Okay.
Go ahead.
Okay, there's a question on the chat box.
Oh, okay. What is the position of MFB as regards VAT and CIT? Oh, okay. You will agree with me that the second schedule of Value Added Tax Act actually explicitly contains that banking related, microfinance banking related services rendered by an MFB is VAT exempt, right? So what that means is that even though on its, for MFB, on their core microfinance banking related services, they should not charge VAT, but that does not exempt them from filing VAT, right? That also does not exempt them from charging reverse VAT on transactions outside their microfinance related services, right? So I do advise people and my clients that giving that very caveat does not exclusively exempt microfinance banking operation from VAT totally. And that caveat also does not exempt them from filing VAT. Whether you charge or you don't charge, or you exceed that threshold or not, you are expected to file it. Adeniyi, I will need you to put clarity to what you want to clarify on CIT. Is Adeniyi there? I didn't
Yes,
get
sir.
your requests on CIT.
You've cleared out of VAT. Microfinance bank, I think they pay CIT. They pay CIT.
Of course, yeah, they are liable to CIT.
All right. That's
depending on their threshold. Depending on the threshold of their income. All right, so Khadija, go ahead.
Okay, for B, stockbroking companies. Every company operating on the floor of the Nigerian Stock Exchange is required within 7 days after the end of each calendar month to file with FIRS a return for the preceding calendar month. Transaction involving an offer in the primary market. Transaction involving an offer in the secondary market. Type of offer. Number or value of transaction carried out for relevant each month.
Yeah,
Service
this one
rendered.
is just talking about, sorry, I had to cut you. This one is just
Yeah.
talking about those disclosures that stockbroker related companies is to provide when they are filing those returns, right? While for banks, it's just the name, the address of the taxpayer, of the customer, and the details of the bank accounts that they have opened. Do you understand? So that's just for that. Because of time, our time is fast spent. Assessment procedures. When this now, we're looking at how assessments are now ascertained. When a company has filed, thank you, Khadija, I'm so sorry I didn't, thank you. When a company has
Yes,
filed
sir.
its self-assessment returns, comprising of the audited accounts and tax computations, where the FIRS is satisfied of the tax returns filed, the FIRS shall accept the returns and deem the returns to be final and conclusive. However, if the service is not satisfied with the returns submitted by the company, the FIRS shall proceed to assess the company on the amount of tax it deemed fit to be attributable to its income earned for that year. So that means that there could be various types of returns or assessments. There could be self-assessment is a form of assessment where the taxpayer actually self-charge itself and ascertain what could be liable as taxes. Another form of tax assessment is what we call the DEX assessment. This occurs after you must have done your self-assessment, and the DEX officers actually look at what you have filed, and they did not, or they are not satisfied with the tax that have been paid. So they then raise additional assessments known as DEX assessment. So I've explained these types of assessment. I've explained what we mean by the self-assessment. Because of time, I'm just trying to rush through. Additional assessment could be or could arose from DEX review assessment or even from tax audit, as the case may be. So the one relating to tax audit is what I call the best of judgments or administrative assessment, right? The tax office look at what you have and is not satisfied. They could raise an assessment in the form of DEX review. If they are still not satisfied after your response, they can recommend the client or the taxpayer for a tax audit. Then we have what we call jeopardy or protective assessment. This assessment is raised to meet a particular peculiarity. The FIRS raise this assessment to ensure that taxes are not evaded in urgent situation, right? So for example, impending sales or transfer of trade or business, most of the time, this occur as a speculative assessment. Then the last one is on this slide is the back duty. Back duty usually come because as a result of tax audits. And you remember that it is also provided that the law actually provides a limited period that back duty can actually cover. It should not be more than 6 years from the year that assessment or that notice for that audit was initiated. I believe that is well understood. If there is any question on what we have raised, explained thus far, please ask. I've made mention of self-assessment. I've made mention of additional assessment, which are called the DEX review assessment. BOJ assessment or administrative assessment is just very much like that DEX review assessment too. We have a jeopardy or protective assessment. We have what we call the back duty assessment. Any question on that? Any question?
Yes, I have a question.
Okay, make it clear.
Yeah. The back duty assessment, it's for 6 years, right?
What do you say?
I said the back duty assessment. I said, is it for 6 years, like 6 years backward?
Yes, it should be limited to 6 years. It can be 1 year, it can be 2 years, but it should not be more than 6 years.
Okay. Is there anything like a refund? For instance, now, I don't know, maybe you can categorize this as a back duty assessment or not. That of capital allowance, that is for 5 years. Any capital allowance, any unrelieved capital allowance as at the year of cessation. So I do know that you have to take it backward for
No,
5 years. So are they going to refund them?
Yes, if the audit has been done, you know, back duty usually arose in a form of audits. If an audit has been done and the tax authority has ascertained that you have overpaid, right? There could be a refund, but the process for refund is usually very, very, very rigorous, right? It is a very difficult exercise for a tax authority. We agree that you have a tax credit. It's very, very difficult. But if you clear all doubts beyond reasonable doubts, of course, a reasonable tax authority may approve, but that tax credit most of the time when it is then recognized may be used as an offset for future tax purpose or in extreme cases given in cash. Very extreme cases given in cash. Is that clear?
Yes, sir. Thank you, sir.
A volunteer reader, please.
The Finance Act 2019 makes provision to allow FIRS serve company notice of assessment through registered post carrier service, email, or any other electronic means as domiciled by the service.
Good. Go ahead.
Should I continue, sir?
Yeah, go ahead. That is well explanatory.
Okay, final and conclusive assessments. An assessment raised on a company is said to be final and conclusive when there is no valid objection or appeal has been lodged against the amount of total profit assessed within the time statutory allowed, that is 30 days.
Okay, so let me quickly explain that. Final and conclusive assessment is not unique on its own. A desk review assessment can be final and conclusive. A protective or jeopardy assessment can be final and conclusive. A back duty assessment can be final and conclusive on conditions that after the FIRS has raised that assessment, you did not object to it, saying you are not satisfied or otherwise within a period of 30 days after the receipt of the assessment. So if you didn't have any response to that, then it means that assessment will be taken as being satisfactory to you. That means it's final and conclusive. Go ahead.
The amount of total profit has been agreed by the taxpayer after the objection has been submitted by the FIRS.
Yeah, that is also, that after objection has been submitted by the taxpayer, not by the FIRS. I take responsibility for that. That is an omission. Okay, then the last one, the amount of total profit has been determined. Go ahead.
Amount of total profit has been determined by appeal procedure.
Procedure, exactly. So any of these instances can give rise to a final and conclusive assessment. I'm just trying to rush up because of time. Collection procedure, the time limited for payment of tax. The time limited for payment of tax depends on whether or not tax payable has been determined by an assessment raised by the FIRS or a self-assessment filed by the company, right? So it depends on if you have, if that assessment or the amount due to be paid is based on what you have self-assessed or what FIRS has raised on you. So if it is on self-assessment, what then happens? Every company shall make payments of tax due on or before the date of the filing in full or in piecemeal payment, but you have to get an approval for that piecemeal payment. But also as a condition for getting that approval, when you are filing when you are filing the assessment, you have to attach the evidence of payment of the first installment to it. Then for assessment or payment that is due on assessment raised by the FIRS, when tax due becomes payable by the company on the basis of the assessment served by the FIRS, such tax should be paid within 30 days when such notice was served. But if you have any objection to that, you must have also submitted the objection within 30 days. But if you don't have any objection, you can also make the first installment payment and appeal. The application has to be in writing for other staggered payments. Then the currency of tax payments. The currency of tax payments of income tax shall be the currency in which the income that gave rise to that tax was derived. So this is an issue that is very confusing. Federal government through the CBN is saying that crypto is not a legit business, and banks should not support. It is not saying that it is not a legit business for others to do, but it is saying that within the purview of its own subjects, who are the banks, they should not transact in or support the transactions of crypto business. So if a client has earned income in crypto and FRS is saying they should come and pay tax, in what currency will they pay the tax? My question, in what currency will they pay the tax? And should they actually pay that tax? It is very difficult to answer. I think all the agencies of the federal government has to collaborate and be able to reach a better consensus. The NSC has recently provided a guidelines for the operations of crypto business within companies under its purview, but the CBN has not revised its submission. We are hoping that very soon, all of these agencies of government will be able to synchronize their processes and be able to make decisions and guidelines that will not be against each other. Enforcement procedures. In a situation where a company fails to pay its tax due to the Federal Inland Revenue Service, the FRS has the power to enforce payments or recover tax due through any of the following methods. 1, forceful seizure of the taxpayer's goods, chattels, bonds, or security. Seizure of land, premises, or properties owned by the taxpayer. The goods or property can be sold to recover the tax due if the taxpayer fails to offset his liability within 14 days of seizure. Then the FRS will sue a taxpayer for recovery of tax due by filing an action with the tax appeal tribunal within its jurisdictions. All right, that is the last aspect of what we are set to discuss today. I believe that in the course of this, you have learned at least one thing that is new. Any question before we call it up, or contributions from any quarter? Okay, somebody has just raised.
Okay.
You have the floor, please.
Okay, sir. The fact
Your
that
name first. Your name first.
Toib, Adebashi Toib.
Okay.
Yeah. The fact that the FRS is given the power by law to seize some of the company's goods and services, okay, the goods or property of the business, so they then sell it. What if what they are seizing is higher than the amount they are supposed to pay for tax purpose? Are they going to refund the balance to them, or they take it, or they take everything like that?
No, the provisions of the law is actually very fair. If the value of what you have seized is more than the tax due, you are to collect your own and return the remaining. That is why during the advent of lien on banks accounts, they are not expected to take more than what the taxpayer is owing.
Does that mean that you mean if a company has failed to pay a particular tax, that the bank will just go to their account and take the money from the account? The one you said, lien on bank or something.
Yeah, you remember that. You remember that occurred during the dispensation of Fowler. I don't know whether you are abreast of that.
No, sir.
Yes, when Tunde Fowler was the chairman of FIRS, there are occasions when presumed tax or accused tax defaulters' bank accounts were laid. So they were laying on the premise that they're owing the the FIRS XYZ sum, right? There was a directive that the bank should debit the account of the taxpayers and credit the FIRS account. But a number of legal practitioners actually engaged them in court, and that was why that was not done. But they're still laying the account, hoping that since the taxpayer could not use the account, they will have no other option than to engage them and reconcile the tax discrepancies. I hope that answers your question, sir.
Yes, sir.
All right. Any other one?
Hello, sir.
Hello.
Yeah, your name?
Adeni on the line.
Okay, you have the floor.
Right, sir. Thank you, sir. Sir, a real estate company that builds, sells, buys real properties, how do they handle their VAT since they do volume of transactions through their banks?
Technically, their operations are actually, there are some of the things they do that are VAT exempt. You understand? A typical example of that is the sales of land. Sales of lands, the position is very clear. So it is not vatable. So irrespective of which sector you are operating, if what you are trading in is actually non-liable to VAT, nobody will coerce you to pay it. Even if it was done in error, there will be rectifications as deemed necessary. Does that answer your question?
That settles that part. Aside sales of land, which order of their cost is exempted from VAT? For instance, I buy cement, I buy sand, I buy granite and other things to do the construction work. I don't have input VAT. And now I want to sell the property over 100 million. That goes to my account. And FIRS is saying I have bank data, I should come and settle VAT on that much amount. How do I go about that?
It's a bit dicey, but there's a caveat on that. But a number of those things their record has to be well streamlined. You know, there are some of these properties that they build that actually constitute an asset to them, the one they use for their own premises. Are you with me? So
yes, sir.
The law is very clear. On the assets, on the VAT you incur on your assets, the law says capitalize the cost of that VAT, can't claim input on that, right? But if you have actually incurred any costs on items of trade, right, and it is for resale, of course, you can actually claim your VAT as an input. But the law is very clear, trying to justify entities that can actually claim VAT input. Manufacturing companies are there, trading companies are there. Services companies that incur VAT as part of their input process cannot claim input VAT. But the law is also providing that if you cannot claim the input VAT expressively, what you need to do is to recognize the VAT suffered as part of the assets, as part of the cost of that very service rendered, and while the other side will be rectified. So even if they are making a claim that you should come and pay your VAT, you need to be able to make your records very detailed to show you can't be claiming VAT input on what you have recognized as assets. So you should be able to recognize which portion of your transactions are relating to assets and which one are relating to the inventory that you sell. So without you being able to separate those costs, it may be difficult for FRS to just approve on a blanket basis. Then secondly, also note that the concept of VAT input claiming is not on assumption. If you have actually incurred such costs, you need the transaction documents, such as your receipt and every other transaction document, must specify in explicit terms what you have actually incurred as input, without which you will not be able to claim those inputs. Is that clear?
It's clear, sir.
Any other question?
Yes, I have a question, sir. Yes, I have a question.
Yeah, go ahead, please.
Based on this aspect of tax law on the screen that says the currency for payment of income tax shall be the currency in which the income that gave rise to the tax was derived. That is, it is the currency that gives rise to a particular income that we pay the tax, right?
Please speak a bit louder. I'm struggling to hearing you.
Okay, sir. Can you hear me now, sir?
Yeah, I think it's better now.
Okay, sir. I said based on this aspect of yes, sir. Okay. Based on this aspect of tax law on the screen that talks about currency of payment of tax. So I do know that in computation of petroleum profit tax, that we are going to have an export sales and we are going to have the one we sold locally, and they are going to give us the rate of exchange of that is in exam or actually. So we given the rate of exchange of naira to dollar. Then we convert everything to naira. Then we compute. So at the end of the day, you get to know our tax liability. Now, in real life, does that mean that they are going to divide it into two? They are going to pay some in dollar and they are going to pay some in naira? Because during the computation, we would have converted the one sold on external sales, that is the export sales, to naira, so that we have both the external sales and the one we sold externally in naira, the one we sold locally in naira, to have our fiscal chargeable, and we calculate our company income tax based on that. So now, based on this law now, by the time they want to pay for it, does that mean they are going to split the tax liability into two? So they are not going to use a ratio of what is the ratio of external sales to total sales to now know the part they will be paying in dollar? Or that is, I'm asking what happens in real life after the computation. Because I do know that part of the tax liability, we sold some externally in dollar and we sold some locally.
All right, so what happens in reality, you also have to pay attention to the streams of the operations of what we call the oil and gas. The oil marketers, they are not the core what do you call it, oil and gas company. So, but the position of the law is very clear. For virtually all the oil and gas, the core upstream oil and gas firms, their transactions, even if they are selling locally, because of what happens in reality in terms of the exchange, massive or diverse exchange differences, they would rather prefer to make their transactions in the foreign currency, because selling in naira will make them lose much more, right? So most of these entities, in reality, their financial transactions, whether locally or otherwise, are actually consummated in foreign currency. And that is why you even see till date, when they are saying the price per barrel of crude oil, they are not expressing it in naira. Do you understand? But for those in the downstream, the oil marketers and the likes, the companies that we see as the filling stations, they are not the core oil and gas companies. Of course, their transaction will have been consummated in naira, and they can eventually transact accordingly. But there is also, even though the law says that you should pay your tax in the currency of the transactions, what happens within the plight of what is happening in Nigeria today, where even if you have the money, the Naira version to getting your dollar, you cannot even get it. So what FRS do from time to time is to provide an exchange rate. They will give you their own exchange rate. So you can now convert what you ought to have paid in dollars or in any other currency to the Naira equivalent and pay them accordingly. Does that answer your question? Hello, Sahib, does that answer your question?
Yes, sir. But then there's a way I consulted the question, sir. You know,
okay.
I want to believe that there are some companies that sell externally and locally at the same time. And they sell to like they sell the crude oil locally and I don't know, like I want to believe there are some, because in competition of company contracts, you always be given sold externally so barrel and sold locally so barrel, then we compute. So the question is more like, at the end of the computation, does that mean that they split it into two? So some part of it will not be paid in dollar because they were sold externally, and some part of it will be paid in Naira because they were sold locally. Is there no company that sell both locally and externally? Because if it's locally, okay, those are
no. My point first of all is this.
Locally.
My point first of all is this. Take note of this.
Okay.
Whenever you are selling anything externally, it's not vatable.
Okay.
Exports are not vatable. Do you understand? Any form of
yes, sir,
export,
but I'm talking of PPT, not VAT.
Yeah. So when provided your records, even when they are selling locally, they are having a translated a exchange rate for the Naira equivalent. So even though they are collecting Naira, there is a standard, a real-time rate of what their currency of translation is. Do you understand? So
yeah, I get it that way.
So what then happens in reality is that even where you have sold in dollars, because of every other volume of transaction, it pays you off to approach FIRS and say, oh, I don't have sufficient dollars to pay you. Give me your equivalent in Naira. Do you understand? And pay. So even for those entities that transacted entirely in dollar, they would rather prefer to hold onto their dollar and engage FIRS to ascertaining what it could be the equivalent rate. So even if because I'm paying the equivalent rate in my VAT forms and every other thing, I will still state that the transactions are done in foreign currency, but what I eventually paid with will have had a soft land on what I rate we are exchanging in Naira to dollar or dollar to Naira.
Okay, sir. Thank you, sir. Yes, sir.
Any other question? I'm still seeing a hand raised up. Raised.
My name is Paul Kajokumi.
Okay.
Hello. I do not have any question anyway, but I want to appreciate you, Mr. Cole, for putting up this kind of platform. It's my professional colleague Esther that sent me the link, and I think I've learned a lot tonight. And by the grace of God, I believe that I want to say that I won't be missing this class any longer. And also, please, I want you to let me display the number again so I can write it, so I can have a personal chat with you after the meeting, please.
Okay. I'll send it to you.
All right. Thank you so much.
Thank you, thank you, everyone. I really appreciate each and everyone for taking out time to attending this. As we said from the very beginning, our motivating factor is to ensure that accountants in whatsoever spheres of their endeavors are able to represent the profession very well. Over the years, we've seen some decadence in knowledge and skill of accountants. And it saddens me when at the forum and people talk against accounts, and I feel very insulted. I remember there was a period I was to recruit an accounting role for a client, and we interviewed more than 40 people, and none of them could actually justify the qualifications they carry. It was on that premise that we felt that, oh, we have a lot to do as the institute, and even as colleagues in practice, we have so much to do. We are not saying that everybody on this forum don't know what they ought to know, but I feel that it will do us a lot of good if we continue to rub our skills on each other. By so doing, we could have a profession that is well respected, we could have a profession that is well appreciated, and our members, our fellow colleagues will be better remunerated for what skill they possess. That's number one. The second thing is also to providing a platform whereby we can collectively build what we call social capital, right? Remember, there was a question that Esther asked, and I said, okay, we have somebody from FIRS here that could help us, that could help in rectifying these issues. Other colleagues are there. So please, I appreciate everyone, and I want to continue to encourage us to make the best of the moment. Not later than tomorrow, by God's grace, the materials for this weekend class will be shared alongside every other relevant appendices. Please don't just store them. Make sure that you make reference to them, read them, and on the platform, on the WhatsApp group platform, please let's engage meaningfully. Let's ensure we engage meaningfully. A lot of people have asked a lot of questions that are even outside the topic of discussions or topics marked for this particular mentorship, and we've been able to rub skills on them. I've learned from most of you, and I believe most of you have also learned from it. That's how we made, that is how we can build a well and better recognized and respected profession. So I appreciate everyone for your time and contribution in the course of this class. Francis, see your hands up. Any question from you?
Yes, please. Yes, please. The attendance was not posted today.
Please hold on 1 minute. Let me just check on my colleague that is in charge. Hold on, I'm so sorry. Was it posted before?
No, it wasn't. It wasn't.
It was, but it was on view only. You posted it, Sabi. Yeah.
Okay, let me just check. 1 minute, please. She's unreachable now. Please just bear with us tonight. Just indicates for everyone that have attended this class, indicates on the WhatsApp, we'll collate it and rectify it in subsequent class. I'm so sorry for that. All right, so
sorry, sir, before we go, please, I just want to confirm if it was Danjuma that attended to me, to that question I asked. Was that Danjuma that responded?
Sorry, I didn't get you.
I asked the question. My name is Esther Ajibi. I asked the question.
Yeah, hold on,
I asked the question. And he
Matilda.
said Danjuma will get in touch.
Yeah,
Or I should get in touch with Danjuma. Then somebody responded. So I don't know.
Adeni,
I don't know.
Adeni,
Yeah, they say it's view
Okay.
only.
Adeni.
Fight, please.
Okay. All right. Thank you.
Danjuma is on the WhatsApp group. It was Adeni that responded to you.
Okay. Thank you, sir. Thank you.
Welcome.
I appreciate it. Thank you so much.
Yeah, so good night,
God
everyone.
bless
Thank
you.
you.
More
I
grace.
wish you a very fruitful week.
Good night.
Just indicate on the group,
Amen.
on the
You too.
WhatsApp group, your attendance. I believe from subsequent class we'll be able to rectify this. I'm so sorry for that lapses.
So I would like to private
No,
chat to you.
Yeah.
Yeah, anytime you can do that, please.
Okay, sir.
Yeah. Good night, everyone, and enjoy the week ahead.